Are you planning to buy your first dream home? Don't miss these credit tips. Number one is credit. Number two is money. Number three is income. These are the three major ingredients of buying a home. The first thing is credit. You're there to buy your home in next maybe 3 months. The first and the foremost thing is you don't miss any of your credit payments. It's okay to pay the minimum payments, but never ever miss those payments. Even if your bill is in dispute, creditors will report it and it's going to impact your credit score, and credit score is a basic ingredient for the qualification for the mortgage. They report to the bureau generally in the mid or end of the month. So whenever you have a credit card bill, just pay it before the end of the month. Now let's move on. You are good with your credit, but there's another thing you need to be very much aware of. Lenders, basically those banks, they don't want to see a new trade line on your credit report. In basic terms, this means when you are about to buy a home, don't apply for any new credit. Never ever apply a new credit card, line of credit, or let's say car loan just before in that transition period, because it will show a new credit line. It might impact your qualification. This is one of the most important tips a lot of people will miss here is never ever co-sign anything, any credit product at your friends, your family, your brother, sister. Never ever do it, because people think they sign it on somebody's behalf. It's not going to impact their credit score. It won't be considered as a new trade line on their credit score. No, don't ever do it. I have seen the cases where the friends co-signed for somebody's car loan because that person was new here, the credit score was low, but what happened? The car went into an accident. Now this guy is ready to buy his home. He have the down payment, very good job, all those things, but his credit score is impacted. Why? Because the other person, the friend for whom this guy signed it on the lease, he haven't paid those installment back to the car company, and now it went into collection. It's getting reflected. Everything is impacted on that person. See, this person got stuck. So you need to understand, when you are about to buy your home, never ever co-sign it, even it's a house application, any car, any type of loan for somebody else, because it's the same thing, whether it's co-signing or it's you are buying or securing the credit for yourself. That's very important tip. Now let's move on to the second component, which is the money component. Never ever have big cash transactions happening into your bank account unless you have a paper trail associated with it. Let's say you sold your car, you have a proof for it, there's a deposit coming, that's fine. But let's say you got money back from your friends, you lended it whatsoever, it's a 10,000 deposit going into your bank account, and you don't have any paper trail, you don't have any justification available for the lender. It will be taken on the wrong side of it, maybe let's say anti-money laundering or AML, whatever. So never ever do the big deposit into your account when you are about to buy your first home. Even for investments also, most of the lenders don't consider gift amount, like money coming from your friends, family, as an proof for a down payment when you're buying as an investment property. Recently I heard like RBC Bank, if you're doing 25% from your pocket as a original buyer of investment property, 75% can be considered as a gift. So you need to be mindful which lender you're talking about. If you're buying an investment property, have your down payment intact, because some of the lenders don't like the gift payments. Another thing to talk about is your income. You have a stable income. You went for a pre-approval for the mortgage, that is done. But when you bought your first home, what you did, you changed your job. What happens? You were on a full-time T4 or W2 whatsoever. You went to a self-employed phase. Now the lenders might question you. They might not consider your pre-approval application because something changed in between. The income source changed. You went from a full-time to a self-employed. So whenever there's a job change happening, it's good. We don't want to restrict ourselves. When you're getting good opportunities, always jump for it. But it's good to talk to your lenders, because you are about to buy a home. It's the biggest investment of your life. A lot of money and emotions involved in it. Don't take a risk at that time that you're changing or switching your jobs, because lenders' criteria will change at that time. And the last but not the least is, it's always good to ask for help as a first time home buyers. I know buying a home is the biggest investment. So sometimes the people don't have the required funds. They have a good credit score, good jobs, but those type of savings are not there. Because of that, they are not able to qualify. You need to consider, as per the 2021 analysis done by CIBC Bank, $10 million were used as a gifted fund while purchasing your home. So those gifts were coming from parents. Even there's an average of $82,000. Can you imagine $82,000 coming as a down payment, as a gift from your friends, family, whatever, like the parents? So it's always good to take help from your near and dear one, because this support, this financial support is required at that time. This is how you need some sort of a help here. It's always good to take help from your family to qualify for your first home. I hope you will enjoy this video. If you like it, don't forget to press the subscribe button and share in your network, friends and family, because we believe sharing is caring. Thank you guys.